Morning.
Morning. Can you hear me?
I can hear you.
Oh, wonderful.
Hi, can everybody hear me? Just checking my sound. Yes, thank you.
Sure. Morning.
Ethan, you look good for having been on a plane all night.
I'm gonna go catch a nap after this meeting.
Thanks for joining.
No problem. Well, I didn't think I'd be able to come to the Netherlands because they had quarantine up till like 2 weeks ago.
Yeah, I remember you saying that. Yeah.
Yeah.
It's probably
Could be
nice to
worse.
get out.
Say again?
I said it's probably nice to get out and travel. I haven't been on a plane in since the beginning of COVID.
Well, I don't know if I like planes, but it's important to meet people and see people. But yeah, I was gonna say we have somebody from our company who runs a plant in China. He went over there, and it's 21 days quarantine under armed guard, and then you travel to he's going to go to where the plant is. It's another 7 days of quarantine. I don't know how armed the guard is, but that's what he said. He's in a hotel room where they bring the food to him and he's not allowed to leave. Here, it used to be 10 days, but now it's nothing, just a lot of paper.
Morning, Chris.
Hi, Brittany.
Good morning, everyone. We'll just give it another minute or two, and then we'll get started. Lori, I think we're just missing Peter, who's not joining today, right? And maybe I don't know if the mayor was going to join.
Yes, Peter is absent today, and Sherry said she would be attending, but would have to get off the call at 8:30.
Okay. All right. Well, it's 7:45, so I'm going to go ahead and call the meeting to order. Lori, do you want to take the roll, and then I'll make my comments?
Sure.
Thank you.
Okay, this is Lori Carney, Clerk of the Board. Good morning, everybody. Brittany Birmingham.
Here.
Ethan Goldman.
Here.
Alan Lebo.
Here.
Perry Salonia.
Here.
Lazaro Guzman.
Here.
Sherry Cantor. Matt Hart.
Here, I'm going to leave my video off because I don't have the strongest connection. Good morning, everyone.
Morning. Thank you. Good morning. Chris Kashmar.
Here.
Rick Ledwith.
Here.
Lee Gold. Paula Kanaki.
Here.
And Becky Seelman.
Here.
Anybody participating whose name I have not called? Okay, Lazaro, we're ready to go.
All right. Thank you, Lori. Good morning, everybody. Welcome to the October 18th regular meeting of the West Hartford Pension Board. I'm Lazaro Guzman. I'm chair of the board. This meeting is being conducted in a virtual format in accordance with the Freedom of Information Act, as amended by Public Act number 21-2, which authorizes municipalities to conduct public meetings virtually. Members of the public can view the meeting live on West Hartford Community Television at www.whctv.org and www.youtube/WHCTV5. The meeting is also being recorded for on-demand viewing and will be available on the town's website for at least 45 days. Since we're conducting this meeting in a virtual format, there's some special rules and procedures that I need to cover before we begin. First, I ask all participants to mute your device when you're not speaking. If you wish to be recognized, please raise your hand and I'll call on you in the order I see hands raised. If you are participating by audio only, or I do not call on you and the debate is ending, then unmute your phone and let me know so that I can recognize you. Second, main motions will be made by me and no second is necessary. We'll proceed immediately to debate. These include motions to adopt, receive, or approve business items. Subsidiary motions still require a second. These include motions to amend. A member must be recognized before making a subsidiary motion, but any member can second the motion by just unmuting their line and saying second. Third, all speakers must make a good faith effort to state the person's name and title at the outset of each occasion that such person participates in the meeting. Fourth, all votes must be taken by roll call unless the vote is unanimous. Fifth, a reminder that if any participant has a problem with connectivity, you should immediately call Lori Carney, whose phone number you were provided earlier. She will let me know and we will recess the meeting while the problem is resolved. If it cannot be resolved quickly, we will ask you to call into the meeting using a phone and participate via audio only. That is it. Again, good morning, everybody. We've got a pretty busy agenda. So let's get started. Next on the agenda was Peter, but I know he's not here. So Lori, was somebody else is there anything to cover in finance or do we go to Chris next?
We have nothing else for Peter, and I just wanted to make a note that it looks like Mayor Cantor has joined the meeting.
Thanks so much.
Good morning and welcome. So Chris, I'll turn it over to you for the investment review.
Great. Good morning, Chris Cashmore, Fiducian Advisors, and great to see folks. I think as per the agenda, we've got 4 topics that we wanted to touch on this morning. We'll provide a quick update of portfolio results through September. And I know there was a question from Ethan regarding the volume of that data. And at our November meeting, of course, I think as I mentioned, if you saw it, we'll have the benefit of the full-blown quarterly report that has a lot of those details. We did want to give a quick update on the pension obligation bond efforts, the dollar cost averaging efforts, and get you caught up there. I think there's an IPS discussion to be had as well. And I know Lori included a copy of the IPS in the materials. And then finally, we've got the good fortune of having Becky join us this morning. I know that the board has had multiple inquiries in regarding a dashboard to keep tabs on progress of the pension obligation bond vis-a-vis the pension plan, and she's going to introduce that template and garner feedback from the board. So again, good morning, and we'll proceed through those 4 topics here as rapidly as possible. Do you, Lori, want to share the our flash report on the screen?
I can give it a try, Chris.
It's just the third quarter flash. It was if not, Lori, I can give it a go.
I'll let you do it. I did save it to my desktop, but you might be able to get to it quicker.
Let me see here. Bear with me. No, hold on. Let me find it. 2 seconds here. Where are we here? Hold on here. Can people still hear me?
Yeah, we can hear you.
Yeah, I'm having troubles here jumping around the screens. I don't know if it's on my side.
Let's see.
For some reason, I don't know why I'm having trouble, folks. I'm sorry on my side having it come up.
I'm trying to can you see that?
Oh, looks like, is that Becky's screen or someone else's?
I tried, so now I'm not sure if it's me or you.
Whose screen is that we're looking at now? Oh, it's Becky's? Oh, thanks. I don't know. I've had this trouble with WebEx in the past, so I'm not sure why. Could you go back to the very first page of our flash? Would that be okay?
Becky, that's you, your screen? Okay.
Yeah. Our flash was attached. I think it was behind your dashboard, Becky, or in front of it.
I'm gonna
Let's see here.
Chris, that's all I had. That was the first page of a 16-page flash report.
I have this on my screen, but it doesn't seem like you're able to see it. I have the September flash. Are you able to see that? No.
I don't know why it is not coming up on my screen. Well, I would ask the chair, maybe, do folks from Lori's email, do folks have access to those materials that were sent out en masse last Wednesday?
They were all included, Chris, in the actual packet and attached.
So in the interest of time, if folks have access to that, I'll run through the information, and then we can backfill as necessary. So if you do have access to our flash, it's the West Hartford Pension Flash Report for September. It was a PDF that Lori attached last Wednesday. And if you jump in that report to page 2, you should see a series of returns, upper left-hand corner, asset class performance for market activity through September. And I think that the takeaway for the board, and we'll spend more time on this next month, really relates to kind of a changing narrative, I think, as you all know, in terms of the backdrop for investing. And that changing narrative centers on an evolving Fed message as they begin to message the idea of extracting stimulus. It relates to some policy gridlock in Washington, the budget reconciliation bill, infrastructure spend and the like. And then finally, and unfortunately, of course, we've got the ever-present Delta variant, and those all things have weighed on markets a bit more recently. So if you're in our report on page 2, you'll see returns through September. And perhaps the biggest takeaway for the board, I think, as you all know, is calendar year to date, interest rates are up a touch, and broad fixed income markets are actually down through September about 1.6%. You see that in, again, the exhibit to the left-hand side. Equity markets more recently have been under a little bit pressure as well. You'll see in the month of September there that large cap US stocks were down about 4.5%. Small cap stocks down almost 3%, and international stocks down as well. Although most segments of the equity markets globally are holding to fairly decent positive returns calendar year to date. You see large cap US stocks up about 15% through September. And then finally, some of the kind of the reopening segments, if you will, of the investing spectrum, things like REITs and commodities and other things that link a little bit into what has been a nettlesome inflation have kind of held out and provided some nice returns calendar year to date. So I think in the interest of time, I'm going to jump right through again. If folks are in that report, I'm going to jump in that report all the way ahead to page, let's start on page 8. If folks can see that, I think Ethan had asked this question yesterday, but you do see there at the end of September about $321 million of invested assets in the trust. DCA1 went off, as you all remember, back mid-year after receipt of the proceeds. $54 million went into the portfolio in the manner prescribed by the board. We did have, you don't see it here in the numbers just yet, but we did have just through the end of the most recent quarter an additional injection into the portfolio, phase 2, if you will. So in our subsequent reporting through year end, you'll see some of those numbers. But no issues there. We've completed phases 1 and 2 of the 6-phase effort to get the POB monies deployed. And the portfolio from an allocation standpoint, again, if you're on that page, is in pretty good working order. 2 quick highlights for the board. And again, we'll spend more time on this next month. There are 2 manager statuses, just we want the board to be aware of. MetWest Total Return, one of your bond managers. We did move to a discuss status recently on the news that one of the senior portfolio managers from the team will be retiring at year end. That is a team approach. And that gentleman who's retiring, Tad Ravel, was joined by 3 other very experienced people who've worked with him for the better part of 15 years. We think ultimately the strategy will be fine, but that change does warrant some heightened scrutiny. No action required by the board. And then the other status change is one that carries over from last quarter, and that's down the exhibit a little bit. You see Hartford Diversified International, all cap. One of the international equity managers in the program is on an elevated status of watch. There was some changes to the team, and a new team was brought in, or a new member, I should say, was brought in to run the emerging market sleeve of that portfolio. So again, no actions immediately required by the board. Just wanted you to be aware of that. The rest of the mandates in the program all on maintain and in good working order. And then in that same report, quickly, if you could join me on page 9, you'll see their performance again, high-level flash report performance through September, and we'll flesh this out some more next month. But you do see a down month of September, about minus 2.7%. The portfolio running a little bit shy of 9% total return through September. And you see the carryover, the longer dated numbers there generally accruing north of the benchmark over basically all time frames. So I think we're in good working order from that standpoint. Let me
Chris?
pause for a minute and yes, Mr. Chairman, see what questions you may have.
Yeah, real quick, the underweight in real estate, the thought is they're just, we're comfortable with that and maintain it. Wasn't sure your thoughts.
Yeah, so we did, you'll remember, it's a good question from the chair. You'll remember that there's a little bit of a lead time effort required for bearings, right? And we weren't able with their queues to get into that, the June quarter. We did do a catch-up contribution in the second phase of the program. So we're back much closer to target now by virtue of that action. So we should be in good working order there. Any other questions? Again, I don't want to spend too much time here knowing that we'll do more of this next month, but any questions from the board on just market environment, the portfolio performance?
Chris, this is Ethan Goldman. Is it possible when you do the recap to do the money that's being held aside as well? So you can show both cash flows?
Yeah, that's the intention, Ethan. Next
Okay,
month when
excellent.
passage, you'll see some of those details. Yes,
All right, so it all ties out in total. That'd be great. Thank you.
that's right. Yep, absolutely.
Thanks.
Chris, this is Al Lebo. I have a question as well. Can you just confirm for me when the dollar cost averaging occurs, when more cash comes in, are you bringing that in a way to rebalance the portfolio? So would that fill the under allocations in here? Is that how that's working?
Yeah, so on the margin, Alan, that's true, right? So we are looking back to the if you go back to the allocation grid in your flash report, we are working those balances as closely as we can to that 70-30 mix that exists strategically for the portfolio currently. So there are small, marginal ins and outs stage to stage just to make sure that we're staying true to those strategic targets. But as you can imagine, right, the portfolio is relatively close to targets now. So you're essentially getting kind of pro rata investment across the breadth of the roster, right, is getting touched at each time, even if the numbers are just slightly different to keep the targets as close as practical.
Yeah, so I think what was generating my question was the same thing Laz was asking about. What if we had just put a whole bunch of money in? Why was real estate so much off target?
And just strictly amount. Remember, it had been running a little bit under target heading into the prior to the POB issuance, and then again, you'll see, we've caught up with that, and it's just a matter of the practicalities of notification to bearings and having all the paperwork in order and advance notice, and them having a queue, permitting a fresh capital. So that's all. So you are caught up again. Anything else?
Chris, this is Perry Salonia, Pension Board. The duration of the funds that are sitting aside for the time being, and I know that right now, and you mentioned it before, that interest rates have been ticking up. So I'm curious, how sensitive are those funds currently to the uptick in the interest rates?
Yeah, that's a great question, Barry. So the POB program, you'll remember by design, is very short duration. We're in a series of kind of, what I would call kind of very principle aware strategies, right? So there's not a ton of duration sensitivity to rates. But we're certainly mindful, right, as are the managers, that there's an evolving Fed message, for example, and there may begin to be some action on the front end of the yield, very front end of the yield curve, as those policy stances change. So that's something the managers obviously are mindful of, as are we. But I think the short answer, Perry, to the question is there's not a ton of interest rate sensitivity. There's a little bit, right, in the search for yield. But all things considered, that program has been very by design, right? And with your input, of course, is very conservatively managed, and is designed really just to be a kind of a lockdown, money market plus type strategy, awaiting those monies kind of transferring over to the pension trust.
Thank you.
And you'll, again, to the questions earlier from the board, you'll see some of those details in the quarterly report next month. Anything else? The last thing I'll touch on, and then I think we'll transition over to Becky to talk about the dashboard. There was again, I'm still in the flash report that Lori had sent over. On page 7 of our flash report, you'll just see a summary template, if you will. And from our standpoint, we think the policy statement is in pretty good working order, and you see there kind of a list of what we think are important elements of an effective IPS, and your program or statement, I should say, meets all of those criteria, if you will. So we don't have any changes for the board this morning. I believe Lori included a copy in your larger packet as well of the existing IPS, which you'll remember you reviewed and approved not too long ago. So we don't have any recommendations back to through the chairman. We don't have any recommendations for the board this morning, but happy to work through any details you have there or whatnot. So with that, I'll pause and take direction from the group or the chair.
I actually had 2 comments. I read it again recently with the materials. The area, Chris, on proxy voting and best execution, I think it was section 8.
Mm-hmm.
There's a paragraph in there, and maybe it's a question for all of us and Lori, but there's a paragraph in there that says a copy of each firm's guidelines and the summary of proxy votes shall be provided regularly to the board. So I'm not sure with what frequency we're sort of being updated on any kind of proxy voting that the managers are doing. But just the fact that it was in there, I was wondering if we need to revisit that paragraph. And then also your thoughts on, there's a sentence that says, each manager will ensure that there's best execution. Thoughts there. I don't have an issue with the sentence, but I want to make sure that it's not implying, we check fees regularly, and we check performance net of fees, but it's not like we're digging into how they're executing their trades. So those were the 2 areas where maybe I just thought maybe you'd have some thoughts. I don't know if they need to be in there or what your thoughts are.
Yeah, so it's a Chris Cashmore, fiduciary advisor. So it's absolutely a good question. I know our research team, right, is kind of gathering that information through time. I think they do it on an annual basis, Lazaro. And I think those are certainly details that we're happy to flow through to the board, right? If you'd like to review some of that. I think it's a matter of recent practice, right? I'm not quite sure the last time we did that exchange, quite frankly, but it's certainly data that we can access and share with the board if you see fit.
No, so the fact that you guys are collecting it, maybe that's fine. So then the thought is that if there's something were to come up that one, it's great that it's being collected, and then 2, if something were to come up, that would be part of your update. But I think that's what I was getting at, that there is a mechanism where at least your research team is looking at it, and then there's a mechanism to bring it back to the board. So I'm okay with leaving it in there.
Mm-hmm.
I don't know if anybody else has thoughts. I would like to reaffirm the investment policy statement. Just reading through it, that is something that we're supposed to do annually. So hearing no questions, and unless there are objections, I don't think we need to go through a roll call, but if it's unanimous, we can reaffirm the investment policy statement.
This is Ethan Goldman. My question is, if it's okay to ask,
Sure.
is to your point on the proxy, because I'm thinking how you would process that. I'd be interested to know what other groups do. I'm not sure we want to get buried, because I think you could get buried in proxy voting, but presumably somebody's doing the votes. So maybe
Yes,
Chris has some insight or some other group.
Yeah, it's
Right,
through the,
Chris.
is that okay? Yeah, Chris Cashmore, fiduciary advisor. So I think Ethan, typically, right, those responsibilities reside with the managers themselves, right? So we're, as you know, we can't vote proxies and don't vote proxies, but the managers are doing so on your behalf. And, that's kind of the record we're collecting. I think the managers are doing what, right, they think is in the best interest, obviously, of their mutual fund shareholders and their separate account clients. So, we're kind of tabulating and gathering that information along the way here. And that's kind of where that responsibility resides today, is with the fund managers. If that makes sense.
Yeah, I guess maybe it'd be interesting to see it the next time it comes out. So I'm fine. I just think it'd be very difficult as a board to be doing it, but I'm not sure what the alternative is.
There's the one alternative that comes up and this tends to be Chris Cashmore, fiduciary advisor. Sorry, this tends to be in the large state systems. There are entities out there, proxy voting entities that some of the big state funds will hire, for example, that may have dozens and dozens of managers in their portfolios who are out there and charged with voting proxies on behalf of an end client. We typically don't see that at the local level, though. To the point, Ethan, right? It's the managers kind of doing that, and it generally is not too overwhelming either. So,
okay, fine. I'm good. I hate to see the expense, so that's of having somebody do it.
So unless there are any objections, speak now, or we'll unanimously affirm the investment policy statement. All right, let's turn to the Becky and the pension obligation bond dashboard discussion.
Good morning. It's good to see all of you. Let me just try and pull that up on screen. Is that visible?
Yes.
Yes.
Okay. So these are not your numbers. This is just an example of a dashboard format that we can use. Typically, we use this on a quarterly basis, so we're updating the numbers based on emerging market performance. I've just pulled out 2 pages to show you. We can track a lot more, but this, I think, is just sort of the key elements. It's showing you at a glance how, on a month-by-month basis, the investment returns have emerged over the years, over the past year. The liability return you can see in this blue bar. The liabilities don't move in response to changes in market conditions, so they're very stable, but the investments do, of course, bounce around from month to month. And we can show you just a quick look ahead at the next couple of years. We can track for you how next year's contribution and the year after might be moving up and down in response to recent market conditions. And we also look at a 10-year picture, so we can update every quarter a 10-year picture of all the key metrics, the liability, the assets, and most important for Peter, who's not here to appreciate this, the contribution level. And we can show you as well some sensitivity around how the contribution level might be impacted by different changes in the investment returns over the next 10 years. And this is a very adaptable format, so we could use this to dial in more specifically on metrics such as what if there had been no pension obligation bond, or whatever is most sort of top of mind for you. So I did want, before we go down any particular path, I did want to hear from you in terms of what you're trying to achieve. I've told you this before, and I'm always happy to spend your money, and I like nothing better than doing something complicated in a spreadsheet, especially if it's color coded. But I want to make sure I'm doing for you what you want done. So if you could just give me a little better insight into what you're trying to achieve, I can then figure out what we can do that's going to best meet that need.
I can go.
Ethan, go ahead. It seems like you have some comments.
Yeah, well,
Go ahead.
what I was looking for is if you go back several meetings or quarters ago, when the pension bonds were first being discussed or shown, there was what in my mind was like a base case is, and I realized you did like a lot of examples or a lot of samples, but there was, one that was presented to the board saying, here's what we anticipate, here's what will be in 30 years, and this will show that the whole thing gets paid off. And I think that's an important for future, boards to see, okay, here's what we started with, here's what we anticipated, and year by year, here's how we're doing on the assets, here's how we're doing on liabilities, here's how the investment return is going, and even the excess cash. And that way they know if they're on target, if they're ahead of target, or if they're behind, and what that means. So so this is a great start, and I'm thrilled to see it. But what I was looking for was more a replication of what was presented, of the the example of here's what will be in, I guess, 25 to 30 years, so that we have a path of what happened, because it gets cloudy, and I know a change was made relative to the amount of money that was borrowed from what was initially, when I first came on the board, what was being looked at. So you can capture either the initial assumptions or the one after, when the decision was made to go low, or when the bonds were actually sold. That's my viewpoint.
So when we did our analysis, we looked at 10,000 different scenarios, 10,000 different possible futures, and notwithstanding that big number, we know that the actual future will not be one of those 10,000. The objective of that exercise was to give all of the stakeholders an idea of the possible range of outcomes.
I understand. So if that had been what had actually been purchased, that would have, the one that was shown as example, realizing it was 1 in 10,000, but somewhere there was, the town council relied on something to say, this is where we think it's going to be. They clearly thought that this was the right thing to do. So I just think it's important to track it, so they know, and we know where we're going. And we can't go and necessarily go change the investments to hit the rates. We want to make sure we're following the rates, I guess is what I'm saying, is, are we on target or are we off? So however you come up with that group, there should be a target that is in our minds, not 10,000 versions. So it's just my feeling. I mean, I think it's done throughout. I mean, the town budgets every year and tracks against this budget. This is basically the same thing, just over a 25, 30-year period, particularly because, like I said, people are going to look back and try to remember what happened.
Yeah, I think, Becky, let me add a few comments, just because they're similar, and then I'll also give the group an opportunity to opine. I think the objective is to sort of the dashboard is great, and thank you. Like as Ethan said, it's a very good starting point. I think that the objective was more to kind of zero in on the effectiveness of the pension obligation bonds, where I think the dashboard is a little bit more generic in terms of, funding and returns and sort of just general assumptions. So we're trying to zero in more on the program. So maybe we can sort of capture both of those elements. But I think to Ethan's point, when I looked at the dashboard, I remembered that when we looked at the deterministic projections, there was a template recognizing that there was thousands of scenarios. So what I was thinking was we would start to populate not so much projections now. How are the numbers actually coming out? So if we projected a return, what was the actual return in that year? Well, where did our actual accrued liability end up that year? And then just as an example, there were 3 columns towards the right of that page, and we can go back to it at another point. But there was the town cost with POBs, there was town cost without POBs, and then there was the impact of the impact on cost by the POBs. So we would start to populate the actual experience for those types of things, I think. And so that I think that's kind of where we're headed. I want to open it up to other comments, but just in the interest of time, and maybe I'll get some thoughts for the group. Maybe it's worth for us to sort of, and I have to figure out how we do this just with the rules of the Freedom Act. Maybe we have a working group where we look at your template, we look at your dashboard, and maybe we have some thoughts to come back to you so you're not spending a lot of time trying to guess what it is that we want. That's sort of what I'm thinking.
Yeah. Becky Seelman Milliman, I think that would be very helpful, very instructive. There are, I would include me in that working group though, because there are some things that are easy for us to do and some things that are very difficult, and you need to kind of take that into account as you're going along. My sort of first thought listening to you this morning was that we could perhaps provide a supplemental annual report that is supplemental in addition to the funding valuation that keeps track of where the plan is relative to those initial projections that were based on the 2019 valuation. I will say that one of the hardest things, not impossible, just time-consuming things for us to do is keep track of where you would have been if you had not issued the bonds. Because we need to establish how much assets the plan would have and how much the town would have contributed if it didn't have all the assets it has now. So it's a record keeping exercise. We can certainly do it. The math is straightforward, but it is time consuming. And it would need to be done year in, year out without fail. But that would give you a very interesting perspective. Where would we have been had we not issued the bonds?
No, that's helpful feedback. So maybe that's something for us to sort of to take back, because I think we need to balance. Look, I mean, at the end of the day, this was we all think this was a very good decision in terms of getting the plan funded. So we just need to balance what metrics we want to see, and I think for the board we also want to use it as a tool for if we need to adjust something with the investments. If the investments, if something is not happening according to plan, then to also give us a tool where maybe we can adjust at some point throughout, at different points throughout the program to make the program more effective. So but recognizing your point, things are time consuming. Also, I think it's hard for maybe you've given us a couple of good starting points. Maybe at this point, we just kind of take it back and have a working group and just figure out what the appropriate way to do that. So we're all the information is transparent, and then we share what we find at one of the regular meetings.
Mm-hmm. Becky Seelman Milliman, there are also several things that I'd like to offer for the board's consideration in terms of things you might undertake in managing the liability side of the pension plan. You're so diligent about the investment side of the pension plan. You meet with Chris regularly. You get quarterly updates of how the investments are doing. And there are some actions that you could take that would be roughly comparable, but looking at the liability side of things. The first is that you have historically, and this goes back a long, long ways, only done valuations, full valuations every other year. So that means you have a 2-year gap in terms of insight into what's happening with the liabilities. And I'd suggest for your consideration that you move to doing full valuations every year. The second is that we haven't done an experience study in a long, long time. That's a deep dive into the actuarial assumptions. We've talked about, obviously, we talk annually or semi-annually or biannually about the interest rate assumption. We're all experts on that. We talked recently about the mortality assumption, but I recommend that a study be done on turnover patterns, retirement patterns, pay growth patterns, disabilities, what optional forms of annuity do members elect at retirement, just to make sure that you are having as sound a basis as possible for calculating the plan's liability.
When did you say that the last assumption study was done?
I do not have a date. I'm not sure that
Okay.
that a formal experience study has been done anytime this past 20 years. The assumptions, we keep an eye on the assumptions. We know you're not terribly off course, but I don't recall the last time a formal experience study was done. A third area that I'd suggest for you, and Lori, you'll have to help me here because I don't know if you've done this sort of thing, but do you routinely do a death audit to make sure you know whether the former employees that are due benefits are still living and that beneficiaries of members who elected contingent annuitant forms of payment, whether those beneficiaries are still alive?
Yes, we contract with the company, and so we have it's death monitoring service,
Yeah.
and we get weekly reports from that monitoring
But that
service.
includes the beneficiaries?
It does. It includes everyone who's drawing a pension on the
Okay.
town side and the board side.
But what about the beneficiary of someone who is a member, retired, elected a contingent annuitant benefit, they're still living? Do we know if their beneficiary is alive or dead?
Well, if the retiree dies and had selected a contingent annuitant option, then we would be reaching out to communicate with that person to start the enrollment in the benefits. So yes, so the contingent annuitants would be then entered into the system that's then reviewed by the death monitoring service.
Okay, but you don't know, while the member is still alive, you don't know about whether the beneficiary is still alive.
Correct.
That's something
we
you
do.
could consider adding to that monitoring service, because if the beneficiary has passed away, then we would be valuing a single life annuity to the member rather than a contingent annuitant benefit to the member, and that would reduce the liability.
But
Okay.
And save the town money.
but
So lower the contribution.
Becky, real quick on that though, if the member is still alive and the beneficiary passed, I guess at some point we could find out the beneficiary passed, but the member is still alive, so they could set a new beneficiary. No?
No,
No, you
once
can't set a new beneficiary. It would just be a matter of when we do the valuation, knowing that that beneficiary has died, we'd
Okay.
be valuing a benefit only payable for the remainder of the member's lifetime. Right now, not knowing if that beneficiary is alive or dead, we assume they're alive and we'll collect benefits. So the moment we know that beneficiary has died, we no longer need to hold a liability for the benefits
For the beneficiary.
that they receive, right? And then the fourth thing, which Lori and I actually have already started talking about is the administrative infrastructure that that Lori uses to provide all of the administrative services for the plan, and we're trying to set up a time to demonstrate sort of modern administration infrastructure that Lori could use to calculate benefits, to provide members with more information and ready access to information about their benefits, and do things like produce benefit statements, produce the data for us to do the valuations at the push of a button, which I'm sure Lori would think was an enormous enhancement over the current process, but modernizing the whole administrative infrastructure and bring it more in line with what a member of a corporate defined benefit plan might consider normal. So for your consideration, I'd be happy to explore any or all of those ideas with you in more detail.
Okay, we can talk about those at subsequent meetings and see where we might want some additional service or evaluations. Alan, did you have a question?
Yeah, thank you, Al Lebo, board member. Becky, thanks for bringing up a number of items there. Those are things I certainly would be very interested in discussing and reviewing. One of the things you mentioned was the experience studies, and you said that you do monitor this stuff, and I'm wondering when you monitor, do you have actuals to expecteds? Do you have a chart of how this stuff has been performing over time, and if so, is that something you'd be able to share with us sooner rather than later?
This is Becky Seelman-Milliman. Yes, every other year when we do evaluation, we track actual terminations, retirements, pay increases, all of those things compared to what's expected based on the actuarial assumptions. We don't provide that kind of level of gory detail in our valuation report, but we do have that information. We do have a hole from the period where we were not the plan's actuary. So I can't report to you on what happened during that time frame, but I would certainly, well, when we present the valuation results to you, we talk about those sorts of movements, but we don't sort of formally document it in any one place for you.
Okay, so you provide it as part of the 2-year assessment, but this isn't a quarterly thing that you keep an ongoing and watch the trends as they emerge.
No, we don't. We only get that information every other year. And one of the reasons I suggest you consider having annual evaluations done is that we do, not only do we have a lag by only collecting that information every 2 years, but we don't have that information in such a form that lets us sort of more immediately spot changes, spot trends, and suggest changes in the actuarial assumptions.
Okay, thanks. The other item, Les, is I do think the idea of putting together a group to come up with this tracking thing would be a good idea. I was sort of envisioning that the way this works, and this is something that we actually do in the work I do, is to basically take the model that was used at the time that was originally priced and simply fill in all of the assumptions as they emerge, and obviously reproject the new assumptions, and just keep it tracking that way, as well as the actuals, what are the actual assets, actual liabilities, all that kind of stuff, and so then you get sort of 3 different views of how this stuff is emerging, and it's very helpful to understanding what's going on.
No, that's helpful. I was thinking similar thoughts. So I think let me just check with Lori, and if I have to check, I just want to make sure that that as we get a working group together to sort of formalize our thoughts here, that that we do it in an appropriate manner, and then we have a regular meeting to go over our findings and how we want to look at things. So I'll follow up with the members on, you know, how we can do that, and also whoever wants to participate can participate. Go ahead, Perry.
All right. Thank you. This is Perry Saloni, Pension Board member. Becky, just a question for you on the assumption study. So I know you do the annual monitoring, and you can check the actuals versus expected. Do you know offhand whether there's certain assumptions that are of concern to you right now that you can really point to say absolutely we need to look at that specific assumption?
Becky Seelman from Milliman. That's a really good question, Perry. The interesting thing with studying actuarial assumptions is that we need to tease out the impact of short-term versus longer term. And in the short term, especially anytime we're in sort of abnormal environmental factors, it will skew what we see in terms of behavior. So if we're in economic bad times, people hold on to their jobs longer. So the patterns of turnover and retirement will get skewed a little bit. If we're in boom times, people feel more comfortable leaving one job or retiring for another. So we need to take that into account. Pay increases also do reflect the larger economic environment, but with a definite lag, because the collective bargaining process is that cycle is very slow moving. The most important assumption was the mortality assumption. We tackled that with the most recent valuation. But I do want to really take a deep dive into the retirement patterns, because those can quite significantly move the numbers, not just for the pension liability, but also the OPEB liability. And what we've been seeing is kind of across the board with all of our clients for a considerable period of time now is that people are retiring later. And your pension plan has a very complex set of retirement eligibility. So I'd really want to take a good close look at, are people leaving the moment they're eligible for unreduced retirement? Are they staying in their chairs until they're 75 or 80? Police and fire in some departments, they all leave the moment they're first eligible for retirement, but in other departments, they might stay much longer than that. So that retirement's number one on my hit parade for West Hartford.
Thank you.
Any other questions for Becky? Yes, Matt.
Good morning, everyone. Matt Hart, Town Manager here. Just want to thank you all for the good discussion. Peter Privatera couldn't be here today, but he and I will debrief with Becky, and we can continue the discussion next time as you have requested.
Great, thank you, Matt.
This is Mayor Cantor. I have to sign off in a minute for an interview, but I also appreciate the good discussion, and I think that Becky raised some good points. You all raised some really good points, so I look forward to hearing more. Thanks.
Thank you, Mayor. We've got a full agenda. We've got a couple of follow-ups here that we'll continue to tackle and think about. Any other questions before we move to the next agenda item?
Mr. Chair, Becky Seelman, just checking, do you need me for anything further, or shall I exit at this point?
No, I think if there are no other questions on this matter, which there don't appear to be, thank you for your time, Becky, and we'll be in touch.
Okay, good seeing you all. Good morning.
Thank you. Kristen, I'm not sure. I think the rest of the agenda, feel free to drop. I think the other agenda items don't involve you either, so up to you.
No, thank you, folks. I'll get out of your hair and enjoy the rest of the day, and we'll see you next month.
Appreciate the good work. Thank you, Chris.
Thank you.
Take care. All right, next on the agenda, Brittany, Town Matters.
Nothing to report.
Thank you, Brittany. Rick, you're up next.
Morning, everyone. Rick Ledwith, Executive Director of HR. Our last board meeting for calendar year 21 will take place on November 15th, and we'll have our 22 calendar year meeting schedule prepared for that meeting. That's all.
Great,
on the
thanks, Rick.
meeting date. Sure.
Formal actions. Lori, do you want me to go through these? Do I go through these? I forget the minutes. I can go through them, up to you.
Yes, you would go through them and then make a motion.
Thanks. So the minutes for our last meeting on September 13th were part of the packet. So I'd like to make a motion to approve the minutes for the virtual regular meeting held on Monday, September 13th. And we don't have to do a roll call if so unless anybody has any objections, those would be approved by unanimous consent. No objections, Lori, it's unanimous.
Yeah. Okay, motion carries.
Second, the amended minutes from June 21st were also part of your packet. We don't have to make a motion here. They were amended, they were included. The amendment to me looked fine. Any comments here, or if not, we'll move on to pension administration. And Lori, just to confirm, we don't need a motion there. They were amended and we're all set, correct?
Right, they were voted on at last meeting and voted, it was approved with the amendment that was discussed then.
Okay, thanks, Lori. Pension administration. Memberships, terminations, and refunds. Anything that was non-standard here, everything, well, let me just pause there. Anything non-standard in that portion that warrants further
Morning again,
discussion?
Rick Ledwith, Executive Director of HR. Yeah, nothing out of the ordinary here, Lazaro. 25 new members, 5 non-vested withdrawals, 2 early retirements, and 8 normal retirements. Everything was fairly standard this month.
Great, thank you, Rick.
Be happy to
So
answer any questions.
Any questions for Rick? No, with that, motion to approve pension administration. Again, if there aren't any objections, we can move that forward by unanimous consent. So any objections? No objections, Lori.
Okay, motion carries, thank you.
Any new business that the board members want to discuss? Maybe for this part, Lori, so in order to do a working group, should I contact you or Gina or both? Again, just kind of want to make sure that we stay in line with the Freedom of Information Act.
Mm-hmm. It could happen either way, Lazaro. I certainly could contact Gina or Cynthia Latour and just ask them about how that work group should be conducted and whether it does need to comply, and get back to you, or you could contact them directly and then just share that information, whichever you'd like to do.
Okay, no, I can I'll send them an email with some thoughts on what we'd like to do, and then I'll copy you, and then we'll enter into a dialogue on how to do that appropriately.
Okay, sounds good.
Okay, and then once I have it, just so folks on the line know, once I get our answer from them, at that point I'll reach out and we'll get the working group going. Any other new business or questions, comments?
Lazaro, this is Perry Sloan, a pension board member. I just have a general question. As a new board member, I'm still getting my bearings in terms of what specific assignments and responsibilities we have as board members. And one of the things that I think would help me understand personally, so call this education on my part, is understanding where the line ends between what we have oversight on and what the town finance group would have oversight on. And I kind of going back to our request with respect to asking for additional information from Becky and Chris with respect to the pension obligation bond. And, in some of the dialogue that I heard, and, as much as the information is interesting, and I think it would be helpful to some extent, I wonder if it's more focusing on the decision of the pension bond obligation, and how it relates to how we oversee the investments of the plan going forward. So from my standpoint, and again, I don't know the answer to this, but I'm just looking to you and others in this group for some thoughts. But educating me, or maybe even others, if they feel the same way, with respect to our oversight of the plan's assets, and where does our responsibilities end. And again, I'm using the pension bond obligation as an example of one that was a little unclear to me, where we would really need and necessitate us monitoring to that extent.
No, that's a good question, Perry, and one that maybe warrants a little bit more discussion because that, I think to your point, and this, so the decision to issue pension obligation bonds, that was outside of our scope. The part of our scope is how do we manage those assets? So to the extent that we're tracking the assets and the investment and the effectiveness of the program, so that wasn't really our decision. But to that point, not just to use this as an example, I think it's interesting to sort of look at the assets in the context of the POBs. And again, from my perspective, it's not ever to second guess whether or not, it should have been done, because, we saw presentations. It was, it seemed like it was the right thing to do, but that was outside our scope. So now, from my perspective, it's more making sure if we have to adjust in terms of how those assets are invested, knowing that there was a certain objective of the town and we're responsible for the investment. If we have to adjust because something's not tracking, we have the ability to adjust. But you make a great point. There are certain things that are just outside of our scope. So, how do we balance that and not, and not sort of try to get too much information, especially for things that are, not part of our decision making.
Sure. And
Ethan, does that sort, before I move to Ethan, does that sort of, did I capture what your thoughts are
you
there?
did, and I kind of have one follow-up to that, and that is, if there's some sharing of information between us and the town finance group, perhaps, this is for consideration, but if we would have a dual purpose or dual use with whatever Becky and or Chris would provide, maybe there could be some collaboration between the groups, so we're spending each other's, the plan's assets, money wisely. So to the extent that they could use some of the information and we could use some of the information, well, I think it makes a lot of sense to include it in one exhibit and benefit both groups.
Yeah, and I think, Peter's sort of our liaison. He's sort of the bridge between both. So, but to your point, we'll definitely make sure we we take advantage of either information and make sure that goes both ways.
Thank you.
Ethan, did you have a comment?
Yeah, actually two different comments. First is, since I think I'm the most junior after Perry, I would be interested in whatever information that was out there to help define some of the stuff. But in terms of the dashboard, I would want a dashboard even if we didn't have the pension bonds. The pension bonds are a definite need, but I think it's important to, know what we thought we would be and where we end up. And, and I think some of the information is fantastic, looking at how we're doing against the market. But the reality is, if the market does poor, the market does well, the town still has to pay its pension and its bonds, and needs to be tracking where it's going and whether it's making progress on that or not. But the pension bonds definitely, was done for that purpose. So just my 2 cents for whatever it's worth.
No, agreed. And even I think we do have tracking. We did have tracking mechanisms before. To Becky's point, we're not meeting with the actuarial every quarter like we do with Chris. But I think when we do meet with them, they do, they have provided sort of a historical dashboard, or at least kind of, where we are and what the projections look like. But I think, to your point and everybody's point here, we're gonna do some work on the dashboard going forward so we can better track things. But I just want to make the point that we, there was tracking going on. Any other questions, comments? I'll pause. We're at 8:51 here. Well, if not, I want to thank everybody for your participation. Great questions. I thought the dialogue was very productive. And with that, I'll make a motion to adjourn. And if there aren't any objections, then we'll move that forward with unanimous consent. Thanks, everybody.
Bye, everybody. Thank you.
Bye.